Hi everyone and welcome to Cymax FinTech's weekly market insight. This is part one, which is where we look back at last week. First of all, as usual, our disclaimer. So trading does involve the potential risk of loss of capital and is not suitable for everyone, but hopefully it is for you. Now, many companies will provide leverage, and just be aware you can lose substantially more than that initial investment that you make. All the views, opinions, everything that we include in these is just purely for educational purposes. We're not trying to provide you or encourage you to trade or invest. That must be your decision. And of course, we can't guarantee that everything that we add is always correct either, although we try our best. Now, you should carefully consider the risks, your financial situation, your level of experience, and of course, your risk appetite. And more importantly, only risk capital you're prepared but can afford to lose. That's so important. Just make sure you've got enough funds. Otherwise, do one of the trading challenges and get a funded account. Sometimes that's the best solution. Now, if you've got any doubts whatsoever, then seek independent financial advice before risking your capital, please. Okay, so if we start by looking at what the markets did, I mean, the dollar strengthened towards the end of the week, finishing at the week's highs, probably on the hopes that the debt ceiling will be lifted. WTI was about $70, gold 2015. Bitcoin was down though, 26.5k, and of course Musk found himself a Twitter CEO to replace him. Now, look, moving on to sort of what the data that came out. So CPI headline data came in under 5% for the first time in 2 years, 4.9%. Although that said, core was still higher at 5.5%, which, month on month, 0.4%. Now, that is still more than double what the Fed needs to get to their 2% inflation target. You need to see a series of months around 0.17% to hit that 2% target. Jobless claims rose more than consensus, and I do expect this to continue. I've mentioned this over recent weeks. I expect to see less jobs available and more people out of work as we go through the rest of this year. PPI was 0.2% month on month, 2.3% year on year, with the core at 3.2% year on year. And Michigan consumer sentiment dropped quite sharply, actually, to 57.7. In the UK, house prices were flat. Again, that's probably not a bad result considering rates keep getting hiked. And of course, last week there was another one. The Bank of England raised rates by 25 basis points as expected. But they did warn that there was more to come because inflation is still too high in double digits. Now, the vote was 7-2, and the two wanted it kept unchanged. GDP was 0.1% quarter on quarter, which gave a 0.2% year on year. Not great, but at least it's not recession territory yet. The economy does look a bit weak, though. I mean, the UK economy is resilient. I live here, but overall it's weak. The outlook's not so good. Although saying that, industrial production did surprise to the upside. It came in up 0.7% month on month, and manufacturing did the same. So it was a little bit of a shock there. Moving on to the EU, investor confidence dropped down 13.1, and they're saying obviously that there's more hikes likely as well. In Germany, industrial production was down again at 3.4% month on month. I think everyone expected sort of China's reopening to help them out, and perhaps it has. Maybe it would have been worse without that. CPI unchanged around about 7.6%. And then moving on to China, exports were well down at 16.8% year on year. Now, you know, that is sort of surprising to say the least. And then if we look at CPI, it was 0.1%. And of course, that's year on year. PPI minus 3.6% year on year. So, China's not having a great time at the moment either. They rely obviously on a lot of exports to help them boost their economy. And then on the other side of that as well, internally, domestically, demand seems to be dropping as well. It's possible at some stage soon they might have to sort of tweak their interest rates and cut them slightly, or maybe reduce the triple R, the amount of money that the banks hold in reserve to help out there. Now, this Tuesday, the 16th, I am presenting a webinar with our friends from Active Trades. This is about mistakes not new traders, but any traders. This is mistakes many traders make. And I'm going to try and come up with solutions with some solutions to some of them as well. So why not join us? It should be interesting. Starts at 5 o'clock on Tuesday, British summer time, and I'm just going to go through a few things, try and give you some ideas just to help you out. Maybe you're making some of them. I mean, we all make those sort of mistakes from time to time, for sure, because we get caught up in it. But hopefully this will help you. Just highlighting sort of our services, CyMax FinTech. So obviously we provide these to help you prepare for the week ahead. Then we've got our daily newsletter. With that you get fresh global news and sort of fresh daily chart levels and pivot points. Then if you want to fill in some gaps in what you're doing with your trading at the moment, then we offer one-day workshops for that. If you're new to trading, it will help you to decide if trading could be your next career or actually provide you with a secondary income. And of course our 1 week course is for those that are sort of really interested in jumping straight into trading. By the end of that week you'll feel fairly confident. You'll be able to make trading decisions, feel comfortable analysing, etc, etc. It's a great way to get the foundations on which to build your trading career. And if you've got an inner trader, I will find it. Now, if you're really serious about turning trading into a career, then the only one for you is our comprehensive accredited masterclass. It's designed to provide all the knowledge and trading tools you're going to require to navigate any market in any market conditions, and of course any asset class as well, because we cover all of them. Now, if you're at a level but you can't sort of get to the next level, then trader mentoring may be a way where we can help you. If you're involved in a company and they're struggling with the cost of raw materials, etc., then we help with hedging for FX and commodity exposure. And of course, we provide trader educational content, individuals, exchanges, brokers, whoever wants it to a degree. And then of course, if you are underfunded, then you should really consider going for a funded trading account. It can definitely help you. These markets are so volatile at the moment that maybe you're struggling because your stops are too tight, you haven't got the funds behind you, etc, etc. Then a funded trading account could be the answer. Of course, you've got to qualify by passing their challenge though. Now, if you want to contact us at all, it's info@cymaxfintech.com. If it's anything trading wise you would like to direct to me, then it's chris.tubby@cymax-int.com. Thanks for listening. Hope to see you in part 2.